Hello, welcome back to Crypto Smart Analyst. So today I'm going to be making video about the expectation for the week. Like I said, we're going to be making weekly videos on what to expect in the market every week. That's for the premium members. Yeah. So if you like, as analyzed last week when we had a market crash, I said we were going to retrace back to July start. Yeah, I said that was during this week. I did the last video during this drop, and I said we are going to have to correct back to the 50. No, it was this one. Yeah, this was this drop. During this drop, July 5th. Yeah, I said we're going to retrace back to the top. We took out the liquidity, and I think here you can check the previous video. I said we're going to go back to 58 region. And we're currently testing 58. We're actually about testing 60. I think we're going to take this liquidity. You can see the liquidity line right now. It's a bit long, yeah. So yeah, it's a bit long. The liquidity above is below the liquidity below. So I believe we are going to take this liquidity above first before thinking about taking the one below. The liquidity below right now on daily time frame is currently around 50. We have now 48k. Then we have, like I said, let's action out the demand zones. So if we're going to be dropping, we're going to be dropping around here. So like I said, we are retesting the market flip line, which is the yellow line. So if we reject it, rejection of the market flip line would indicate a downtrend. So I feel it's going to reject. You can see we have the yellow candle, which is bullish, but it being bullish doesn't mean it cannot reverse. Like this is an example of that. So you have a yellow candle. The next candle after it was a red candle, indicating that the market is yet to be above. Sentiment wise, it's just dancing around support. So we are meant to actually have that kind of reaction. The green line is the line that actually typifies if you are in bull market or bear market. Currently I'm on daily time frame, and the green line is actually your 200 daily moving average. So 200 daily moving average right now, Bitcoin dancing around the 200 daily moving average indicates that there's a potential of the markets. We are currently at the 50-50 region. So what's the worst that can happen? The worst that can happen is that we are going to break it and we're going to come down straight. So broke it, we are currently above it. So the major thing right now, for us to continue go back into the bull mode, yeah, we need to break this sufficiently and continue uptrend. We need to break this sufficiently and continue uptrend. Else we reject. If we reject this line, this 60k region, then we are coming down to 50k, 48k region. That's my expectation. If you look at the liquidity we currently have around that region right now, you can see before the liquidity below was more than the liquidity above, but now the liquidity above has increased. You can see the liquidity above has increased. We are now have more liquidity above than we have below. Now we are currently in the 50-50 region. Like I said, the liquidity below is low. It is easier for the price to come lower than to go higher. That's one thing. So they can easily dump it, take the liquidity at 48k, then continue uptrend. They might not take the liquidity at 30. We might and we might not. But if you switch to the weekly time frame, you'll see what I'm talking about. So on the weekly time frame, you can see we have more liquidity below than above. So this candle right now, you can see is yet to break. So you can see that we are bearish on weekly time frame. We are kind of partially bullish on daily time frame, but we are bearish on weekly time frame. So this indicates that we potentially could continue downtrend, which is going to take us to these demand zones. And you can say we have more liquidity below than we have above. But if you are probably focusing on the daily time frame, you want to probably get in this like, okay, it's going up. But for me, I think we are going to dance around the 200 daily moving average. Like we're going to consolidate around this region for a while. Potentially dump. It's best for us to dump and go up from here. So it's best for us to dump. Then from dumping we can now start going up. From there, I think so looking at the fear and greed, click here. We're currently at 29. Fear and greed is currently at 29. So we have more fear than we have, and we have greed is currently low. So I expect the market to get us to around this region about I expect us to get to around 15 fear. By the time we get to 15, then we are ready for the bull run. So that's my expectation. We're ready for the bull run when we get to like 15 and 20. So those are things you want to look out for. Yeah, the market is still scared. People are fearful, but it can easily flip bullish if you continue from here. So my expectation is for us to actually dance around. They're going to get it so boring that you feel like, what am I doing in crypto? Then they kick it off. So like I said, you always do your analysis top down. You do the top down analysis approach. Let's say if you're doing it anytime, if you're a scalp trader, daily trader, you want to do your analysis of 4 hours, look at what is happening on 4 hours, then pick your entry on 15 minutes time frame, check what is happening, then pick your entry. The same thing goes for long time frame. You want to analyze on weekly time frame, see what's happening on the weekly. Weekly is bearish, which is indicating zones that you need to buy from. So you can see we have liquidity here, we have liquidity here. So weekly is indicating where the buy demand zones are. You want to wait for that to buy. Okay, interesting. Then you go on daily, what's happening. Daily is currently 50-50 right now, but we still have liquidity below. So if you project our weekly moving average, like I did in the last quarter, if you project the 200-day moving average on weekly, you will say we're going to be eating it around this 38k region, which I feel is where Bitcoin might dump to before we continue uptrend. If we don't dump, the major thing is we're going to be consolidating. It's going to be an accumulation region, a long accumulation region, and by the time we are accumulating, the moving average is going to be moving upward to around this region. Let's say November. So let's say between the months of October, November, December. No, let's say October to November, October to December, thereabout. So October to December, we should begin and continue the bull run uptrend that probably will take us to 100. So that's my expectation for the market right now. So if you have any question or you have a contrary opinion, please drop your comment, let me know. That's why we're here. We can only discuss it. Okay, drop a comment, let me know, and we can discuss it further. And there's currently it's important to also mention that we currently have a promo. Like a promo, we're going to be having our STIC anniversary 22nd of June. So that's basically STIC clocking 1 year. So you can make video. The thing is, they're going to be giveaways here. You make video about how to use STIC, basically how you've been using STIC. Make a video about how you've been using STIC, both version 1, version 2, whichever one you want, either version 1, version 2, or both. Make a video about how you've been using it and post it on the community are going to vote about. They're going to vote on it based on their understanding. If they understand it, yeah, they can vote on it, and we're going to see who wins. That's just it, to just inside the community. So feel free to do that as well. Thank you, and see you next week.